Newsflash, Washington, Freddie Lafitte buys 200 shares of SoFi. Freddie Lafitte, a man of the people, coming out of Freddie Lafitte and his band with the beat. No, guys, he's coming out of Mayberry. Do you remember when Sheriff Andy Griffith arrested Freddie Lafitte and his band just so he could get that friend of his to play guitar for him? Oh, man, those were the times. Guys, it's un poco mas. We are talking SoFi Technologies Incorporated. Ticker symbol, SOFI. Guys, we'd like to welcome the live audience. This is just unprecedented. We have 3 or 4. I think it was measured at I believe Donald Trump measured the crowd in here. Our live audience is about 6 million people. It's funny. Anyway, guys, it's funny. Politicians are ridiculous. On both sides, I hate them all. Anyway, guys, it's at least an interesting election. It's going to be close, but I find politics fascinating. One of my many degrees, I have political science with a focus on elections, and so I studied extensively election behaviors, and I just find the statistics, the polling, all that dry minutia fascinating. Probably more so than the actual personalities or the policy, which is other side, but just the mechanics of elections are very interesting in their own right. Anyway, guys, welcome and hello, and welcome. Hopefully everyone is having a great day. I know at the end of the day, SoFi didn't really rip, just up a couple of points on the day. Let me go ahead and share my screen with you turds, if I might. So we're up 17 cents on the day, 2.4% down, one big penny after hours. In terms of this was a little bit different because usually you see that mountain and hump, but after the mountain, they push down, to where they want to stop people out. This was a little bit of a bear trap on the day, a little bit of a fugazi because it opened at 7, but to heavy buying pressure. So never actually got under 7. It was 7 to, went all the way up to 741, but then didn't really sell off, just traded sideways. And I want to tell you why I think, the guidance here could be the perfect storm combined with a lot of account ads for Galileo, combined with absolutely explosive demand, student loan, home loan, personal loan, combined with continued very high direct deposits, funding loans at lower costs. I think the guidance on net interest income is going to be absolutely bonkers. If you've been watching the Stock Goat, he's very excited. Love me some Stock Goat. Anyway, guys, welcome and hello and welcome. There's basically, I can just explain to you, if you guys have been watching, Canadian U-turders who focus on FinTurd, or if you've been reading, any of these rags, Seeking Alpha, Tip Ranks, whatever it is, guys, there's about 1 million of these blogs out there. Basically, it's all toilet paper. They're just manipulating the markets, doing the bidding of market makers. Very, very few of these sites are actually oriented toward helping people that are paying them. It would seem to me it's mostly propaganda, just straight out of the market makers. So you hear last probably 4 weeks, guys, SoFi is a dead stock. You hear this everywhere. It's a great company. They're executing, but it's just a dead stock. No matter what happens, no matter how well they perform, no matter the EPS, no matter how much money they make, and you could go crazy, no matter how big a dividend they pay, they're just the stock's never going to move up. It doesn't matter. And I'm like, folks, that's not how this works. The reason they're able to manipulate it was a SPAC. There was so much uncertainty. They weren't making money. The student loans got canceled. Then interest rates went up. It was higher for longer. There were so many points of FUD. The problem for the bears and the shorts at this juncture, which would be prudent at this juncture, is that all of the FUD is falling away. You're going to see rate cuts, but the economy's not falling apart. We had fairly strong numbers today, but the inflation is coming down. Economy's still doing good. Jobs numbers were good. So I don't think you're going to see that massive increase in defaults that, so many of our, gracious neighbors to the north are worried about. Data-driven investing, deadliest catch Chris. I think he was saying defaults could be 6.7. It looks like guidance, not guidance, but analyst estimates like 6.2, 6.7. Noto saying, LaPointe saying the range that we're seeing is well within what we planned for. There's so many reasons I believe that dead stock not going anywhere argument is a complete fugazi. I'll just run them down. And unlike everyone else who talks about this stock for the most part on the bearish side, I'm actually going to back up what I'm telling you with facts. You don't have to believe a fucking word I say because I show you the data for everything I say. But like, oh, it's just a, just a big bull. It's just a, okay, yeah, the channel's meant to be funny. It's meant to be a little bit tongue in cheek, but I try to provide information here. So here's the reason, guys. Volume is strong. The way the stock is closing the trading days is strong. It's not indicative of a dead stock. It's indicative of a stock market makers are accumulating. And by the way, other data shows market makers are accumulating the stock, which is what the next one, institutional ownership, is up. Low put volumes, low short ratios, desperate, tiny weighing hack analysts out there just slinging enough diarrhea at the wall. The problem is none of it's sticking if you're a five-headed bologna sandwich talking in circles for 90 minutes. Doesn't matter if you're wearing like a nice polo shirt, if you're an affable guy, what you're saying could still be complete bullshit. And you cannot explain to me in your circular, unibrow, angular, birdish, chia-like ways how fair value accounting is not valid or a scam. Yes, the loans look a little bit better at the beginning based on what you think their value is going to be, holding them on your books, selling them off, whatever it's going to be. The other lie is that SoFi is manipulating these marks. SoFi does not mark their own loans. Unless they recently started. I know Noto said over and over again, these loans are marked by a trusted third party using a huge different number of criterion. We have a model we put in, and this is basically outsourced so that we cannot be, biased, manipulative, etc. Because if you're using this fair value accounting, how you mark the loans becomes critical with what your books look like. And that's why they're saying, hey, they're cooking the books, everything's going to crash. I think Noto's planned for this. I think Noto's 5 steps ahead. That's the other thing, guys. A lot of people are very skeptical about the 80 cents number that they're giving for the high side of guidance in 2026. And when they asked LaPointe about that, touchdown Danny Dolev with Mizuho was interviewing Chris LaPointe. And he's like, how are you so confident in that? He's like, this is the number if nothing else happens, if we have no other pipeline. He's like, by the way, nudge, nudge, wink, wink, how's your mom? We have a huge pipeline. Huge pipeline. Lay in the pipeline. No, this is a PG show. Anyway, guys, welcome and hello and welcome. I hope everybody's having a good day. But I just want to go through and, basically back up what I'm saying so you guys don't think I'm a big sissy boy. Anyway, let's see, guys. So as far as volume, okay, walked it all the way down. Remember, it was 78.80 last week, 56, 33, 38, walked it all the way down to 23, 34, and then today back up to 35. So that's right. I would say perfect volume for bulls, 40 to 50, 40 to 60. 35 ain't bad. Anything down around 20 is just way too easy to manipulate. Anything way too high, you get into, high frequency price fixing. It's way too hard to spot what's going on. But the algo was working super hard today. You see the volume very, very flat. But let's take a look at the let me first take a look at the 1 day, and then I'll come back and analyze this garbage with my garbage throwaway analysis. This is not what a dead stock looks like into closing. Okay, you don't see these 5 big green candles into closing on a stock that's dying. You see the stock selling off. This looks like accumulation. I mean, the algo's trading it sideways, and then people are panicking about this. This candle is very, very bullish. I mean, this was a bit of a bear trap today. The stock did not stop anyone out at 699. I mean, this looks like it's checking back up to consolidate. Guys, got to take a quick call. Be right back with you in 2 and 2. Hey guys, I apologize about that. I have a couple of emergency repairs going on today on some of my rentals. Big gas leak, just a fiasco. So, apologies, guys. Looks like most of you left. Who really cares? This show's terrible anyway. I can't even remember what I was talking about. Does anybody remember? Alberto Bertie Avilés is selling stuff on eBay, is advertising eBay on the comments. Time-lapse car guy Bruno's here. Freddie Lafitte is band with the beat. What's up, Mustang Rider? How's it going? Flint Creek is here. What's up, Flint Creek? Joel Madsen is here. Let's go. I agree with you, Thomas Puzak. Of course, the great Thomas Puzak. Stock Karen is my favorite YouTuber. Stock Karen hasn't been out in a while. I've kind of let that character slide, but I'll bring her back. I'll bring her back. I'm a bit of a pear shape. I'm driving a minivan while talking on a cell phone. Okay. I can't be bothered. Just asked to tip self-serve burger bar. Yeah, no, it's crazy. It's crazy, Flint Creek. Pretty soon you're going to be like tipping. They're going to have like a kiosk at like a wedding. You're not even paying for food. They're going to be like 30%, 40%, $50. Like the tip. I feel for people. I've worked a lot in the service industry. I worked in restaurants. I worked in bars. I worked my balls off for like $3 worth of tips at the end of the night, and it sucks. I feel for people that make their living in the service industry, but you cannot alienate your customers, just inundating them with, sort of exorbitant requests for gratuities. I think people have a generous nature, but you have to let them be generous. You can't, beat them into being generous. Anyway, guys, hello and welcome, by the way. Welcome back to those of you who joined us. Looks like I said, I sorry about that pause, but I just had emergency plumbing jobs ongoing, and I don't want anybody's house to blow up. So you got to do what you got to do, guys. Had to answer a few questions for my contractor. But anyway, Flint Creek is here. Like I said, Alberto, of course, thanks to the great Alberto Bertie Avilés, wielding his wrench with, just only the level-headed sensibilities he can. He's banning everybody. We love it. We like to thank J Money Not a Lurker for producing the show today. He is blocking everyone. Heirloom Cedars here. Okay, son. We got Lorraine here today. Welcome, Lorraine. Hope you're having a great day. Thomas Puzak, we already said hello to. Grit and Grunt is here. Let's see. Going to ride a retirement town. Me too. Danny Don't Lie. It's all about fundamentals to wake up a bunch of peckerheads. Air Force is here. SoFi jumped up to support resist downtrend line back to exactly. I'm gonna talk about that in just a second. Air Force. Bart M is here. I have a feeling they were going to rally after earnings because of better guidance. Yeah, guidance is the key, Bart M, because Mr. Market looks forward. Mr. Market doesn't care about what happened in the past, especially with the growth stock. So you're absolutely right. We need more likes. No. I can't believe I read that. Clap, my dog. You slipped that one by me. Tortuga de Rio. SoFi going absolutely split on earnings. It's gonna basically explode all over everyone's face, slap you in the head like a big, hard, dry salami. Alberto, if you don't believe how hot SoFi is, open eBay, search for SoFi. Yeah, there's no merch. There's no merch available. Which surely do you buy to get my analyst star? That's funny. Clap, my dog. I think we're looking at 825 after earnings. That would be okay with me. I mean, I think it's worth a hell of a lot more than that, but we just have to see what the guidance is. And more importantly, I think we have to see, does Galileo really show some signs of life? Okay, LaPointe said they're onboarding dozens of new customers, early phases of monetization, different phases of integration. He said, look, bringing on a customer takes anywhere from, acquiring a customer can take 1 to 3 quarters, and integrating that customer, bringing them onto the platform, can take double that. So 2 to 6 quarters. Now you ask, how do they know what things are going to be in 2026? Well, they know what customers they're signing right now. Okay, they know what customers they're in RFPs with right now, requests for proposals. They know how those things are going. So they're able to have probably a pretty good sense of which of those contracts they're going to be able to land. And then with that product cycle, they know, okay, if we're landing a customer right now, we're signing them, it's going to be 2 to 6 quarters until the revenues hit. 2 to 6 quarters, guys. So you're talking about like Q4 2024, Q1, 2025, all the way to Q1 2026. Boom. What are we talking about? 2026. So if they're signing big clients right now, they know those revenues are going to hit at the end of 2025 or at the beginning of 2026, middle of 2025. They know this thing's going to explode. That's why they're giving that extremely aggressive guidance on the high side at 80 cents. And Chris LaPointe is telling you, this assumes nothing new. This ignores everything in our pipeline. This ignores everything that we currently have in development, maybe things that we're about to introduce. In other words, we are sandbagging in epic proportions. That's what they're telling you. Nobody believes management. Management's all lying. Why? Why would they want to crash the stock this year by lying to everybody? It doesn't make any sense. How does that do management any good? Noto's been buying a ton of shares on the open market. This notion that institutions are dumping all the shares, that's another thing on the dead stock. It's just a lie. It's just a blatant lie. I mean, I'm telling you, okay, it's short ratio going back up a little bit, but still under 50. I want to look at this one, guys, because these are the filings. Okay, SoFi Technologies Incorporated. This is the chart of the institutional ownership that's crashing, right? All-time high. The chart says it's at an all-time high. The bears say institutional ownership is crashing. Who are you going to believe? The bears or the data? What the bears say is almost always opposite of the data. And then they look forward with these vague sort of, it's just, they never look back and say, hey, everything we said was going to happen was wrong. I was completely wrong. You don't hear the Chia Pet say that when he's, calling for 0 cents. He's like, by the way, I've been wrong all along, and I was recommending you buy this stock when it was double this price, and they hadn't executed for 2 years, and now I'm recommending you sell it, and I'm never changing my target price, and I have no critical thinking skills. So, okay, guys, look at the filings. Are these filings from a dead stock, from a stock nobody wants to buy? Okay, Capital Advise, okay, they sold 30% of their stake. They have 1,500 shares. I've got like tens of times, many times that amount of shares. Okay, Firethorn Wealth Partners just increased their shares 48% to 254,000, and they have 30,000 on in terms of a call option. Raymond James, take a look at this one. Janney Montgomery Scott LLC. I don't know what the hell that is, but they just increased their shares over 100%. Take a look at this one. Pegasus Asset Management. They're often shorting stocks. Increased their shares 9%, 111,000 shares. Look at this one, guys. Bank of New York Mellon. Look at this. Thornton Mellon from the tall and fat stores. Increased their shares 17% to 3.1 million shares. I mean, these are serious customers. Schwab US Midcap ETF holding 2.6 million shares. This is price stability, guys. Once Capital Management holding 250,000 shares. Schwab US Large Cap, another 500,000 shares. Schwab US Large Cap, again, another 800,000 shares. This is not what a dead stock that institutions hate and don't believe in. Institutions hated the stock. They were going to short the stock to death, but they couldn't do it because their narrative did not comport with reality. And eventually reality bites. Oh, I hate you guys. Anyway, I didn't want to cover too much. I just want to get on and just, spout off like a big fat Karen, a big middle-aged turd, a big suburban whiny douche. No, guys. Hello and welcome. Welcome and hello. You guys are you guys all have a place in my heart. Or is that my colon? Is that my lower intestine? I don't know where you guys fit in. Somewhere in the digestive system, I believe. Okay, so here's another fugazi. Short interest, 17%. Shares on loan, 204 million. That keeps dropping every single day. But yesterday, they show them borrowing 6 million shares. Today, borrowing another million shares. Friday, they've been borrowing every single day. And then you look at the official short report, which came out just yesterday. They show 185 million shares on loan. Okay, now you look back over here, they show way less. You look at, if you look at Fintel, they have a more accurate number. So you look at the short interest here, 185 million shares, 18%. Back to 50% short volume ratio. So the shorts are not giving up. They're borrowing more shares. The official short report shows, they were increasing the short. Maybe they're giving back a little bit in the last week. And, the data would say they have. Last 10 days, short volume ratio even crept down to 29 months, so in the 30s, low 40s. So they're not shorting the stock heavily, but they're definitely not, retreating back to that, 10% short level, 11%, 8, 9% that they've often gone into ERs with, sort of back in the good old days. Hello and welcome. Welcome and hello. So this is just, I look at the narrative. I listen to 90 minutes of the fucking bologna sandwich. I'm looking at a forehead the size of a fucking drive-in movie theater for an hour and a half. And it's just gibberish. Fair value accounting is a scam. It's just not. It's just not, guys. you know, I don't understand one point in the bearish case that's not transient macro FUD. Like, what are they saying the company's not executing? What are they saying the business model's not there? What are they saying about the margins? What are they saying about the explosive growth of adjusted EBITDA? Why do they never mention the massive, massive deposit gains? There's some guy, he's the dumbest person I've ever seen in my life, honestly. He's like, they're failing as a bank. They're one of the fastest growing banks in the country. They're taking market share like crazy. They're absolutely killing it. Do statistics, facts, the ERs, objective reality ever seep in to that thick Cro-Magnon skull and that tiny hamster brain all the bears apparently are sharing? Shorting a stock that's just executing, growing, making profits, etc., etc. It's a bad idea. It's a wrong-headed idea. You're able to get away with it because you can control the narrative and the macro has been problematic. If we get this soft landing, we're looking at the perfect storm. Rocket ship, moon, etc., etc. Now, I don't know what's going to happen. Max Payne is 7. And again, here's another reason. You see the puts. The puts are weak. The puts are weak. If the bears were confident this ER was going to be terrible, there's only 2 trading days left to the ER. Would the puts be this week? Let's look at where things, let's see the level of conviction with these bears. I mean, this is old, keep in mind. Yeah, okay. There's a lot of puts, 550. So they're betting on, there's a lot of bulls. There are more bulls. I mean, this options are very, very interesting. I mean, I'm expecting I already told you, I'm expecting a big move up or I'm expecting a big move down. Options are telling me it's going to be up. I think people are hedging with these puts, but I don't think people really expect the stock to go back down to 550. That's my opinion. It's going to have to be disastrous guidance. And how do you see that going into rate cuts with their lending capacity? Just the lending business is going to absolutely explode, and they're telling you Galileo's about to explode. I don't get it. That's why I just keep buying whenever it goes down. So high defaults, there are going to be fairly high defaults, but there's not going to be a crash in the EPS. So SoFi should turn that narrative and say, yes, there's high defaults, but we're managing it, we're hedging it, and it's not hurting our business. What do you think is going to happen when conditions are ideal? Also, cross-selling. Is that a dying business? LaPointe just said 30% of people are buying a second product within 30 days. Cross-selling rapidly improving. That's key to SoFi's business model. What are these guys talking about? So you see when companies have an off year, Affirm, Upstart, Robinhood, they crash, they lose $1 billion. When SoFi has a terrible year, they grow by 18% and make money. Oh, you guys make me angry. Galileo should show massive gains. I'm just basing that on what LaPointe's saying. I'm basing that on the fact that they've been talking about high quality RFPs for like a year now. Some of these can land and hit the books. I don't know if they will or not, but they certainly could. One huge customer hitting the books, those member ads could send us to the moon. They just could. Cross-selling, Galileo, member ads, deposit ads, defaults are manageable, right in what management was planning for. The bear case is a complete fugazi, guys. It's all bullshit. That's all I can tell you. I got to run. I got big dog work. It's Un Poco Moss. Thanks for joining me, guys. It's SoFi, ticker symbol SOFI. I will chat with you guys again tomorrow. In the meantime, take care of yourselves and each other.